Good afternoon and welcome to today's event. I am Isabel Bailey from the Bureau's Events Management team. I will go through some logistics before we begin. Please be aware that this event, sponsored by the Consumer Financial Protection Bureau, is being recorded. The recording will include webcam images and the voices of all speakers. Your attendance will be construed as your consent to these terms. You may turn your webcam off if you do not wish to have your image captured. Any questions or concerns can be directed to the Bureau's representative hosting this event. If you are having any issues with your audio, click on Audio and Video located in the top toolbar. Then click Switch Audio. There you will receive guidance on switching your audio. To adjust the way that you are viewing the WebEx, click on the Layout box located near the top of the screen. There you can toggle between the different WebEx views. The link for closed captioning has been placed in the chat box, which is located in the lower right-hand side of your WebEx screen. To engage during the Q&A portion, you can type your question into the chat box, which is located on the lower right-hand side of your screen. In the chat box, use the drop-down menu, and in the To field, select All Panelists, type your question, and press Enter. For technical support during this event, use the chat box to send a message to the host, and I will provide assistance. Now I will turn the event over to Bukola Adesami, Outreach Specialist in our Office of Consumer Education.
Wonderful. Thank you, Isabel, and good afternoon, everyone. My name is Bukola, and I'm really happy that everyone is here that joined us today. We have a great webinar lined up on public service loan forgiveness and the limited waiver opportunity, and we have a few speakers that will join us shortly to share information on the topic. My name is Bukola, and I am the moderator for today. I work as the outreach specialist in the Office of Students and Young Consumers at Consumer Financial Protection Bureau. And I'll tell you a little bit more about what we do in my office in a minute. But before we get into that, I do want to cover a few administrative items. So I just wanted to note that today's webinar is being recorded and it will be available on our website within about 2 weeks. I know some of the information that we'll discuss today is time sensitive, so we'll do our best to get the webinar posted along with the slides on our website within the next 2 weeks. So please keep an eye out for that. A link to the webinar will be posted in the chat, so you can feel free. I encourage you to click on the link and bookmark it so you can easily access it over the next few weeks. Also, today's webinar we will have a Q&A session at the end of today's webinar. So I encourage you to enter your questions in the chat. And we have a few people monitoring the chat, so some of your questions may be answered directly in the chat, and the remaining questions will be answered toward the end of this webinar. Before we go any further, I do need to read our standard disclaimer, which states that this webinar is being facilitated by Consumer Financial Protection Bureau. The information that we're providing today does not constitute legal interpretation, guidance, or advice from the Bureau. Our presentation today is being made by members of the Public Service Loan Forgiveness Support Group. The topics that they discuss may not represent the Bureau's views on any one particular matter. The Bureau is not endorsing the Public Service Loan Forgiveness Support Group, the views that they express, or any of the services that they may offer. Some other entities or resources may also meet your needs. So, a little bit about the Bureau. CFPB is a federal agency that was created to help make consumer markets work more efficiently, fairly, and effectively. We do that by making rules more effective, by enforcing those rules, and by equipping consumers with the information they need to take control over their financial lives. I work in the Office for Students and Young Consumers, which is part of the division called Consumer Education and External Affairs. Within that division, we help provide information we serve the general public, but we also focus on a few special populations, and that is the service member and veterans, older Americans, and economically vulnerable consumers. In the Office for Students and Young Consumers, we help them prepare for life's financial decisions like managing money, paying for college, saving for college, and repaying student debt. All of these things are with the goal of helping them avoid student loan default or other negative financial events. Today, we're going to talk about the public service loan forgiveness. We'll get into what it is and what is required to obtain public service loan forgiveness. We'll also talk about the temporary changes through the limited waiver opportunity and what you need to do to qualify for that. We'll go through a few scenarios in regards to how to consolidate your loan and how you may qualify for a refund. Then we'll get into what to expect next and a few additional resources before we start our Q&A. So with that being said, I'd like to introduce today's speaker. Our first speaker is Christina Ceballos. She is the founder of the Public Service Loan Forgiveness Facebook group, which has over 130,000 members. Jen Alucha, who will also be speaking today, she is one of the moderators from the Facebook group. And we have Matt Amory, who is the administrator of the Public Service Loan Forgiveness Support Group. So I'm really excited to hear what they have to share with us today. And I will go ahead and turn things over to you, Christina.
Thanks so much, Bukola. I'm very happy to be here today, as well as the rest of our team. So let's start at the beginning, shall we? And I'm going to turn my camera off. Let me do that to save on bandwidth. Per the Code of Federal Regulations, the Public Service Loan Forgiveness Program is intended to encourage individuals to enter and continue in full-time public service employment by forgiving the remaining balance of their direct loans after they satisfy the public service and loan payment requirements of this section. This law went into effect on October 1st, 2007. It was bipartisan with wide support from both parties. This program was created to ensure a pipeline of individuals dedicated to public service to run our local, state, and federal governments, as well as our nonprofit organizations. There are three main requirements for PSLF. You must first have full-time employment in public service, eligible loans, which are federal direct student loans, and have 120 monthly payments made since October 1st, 2007. PSLF is not a program that you enroll in or sign up for. Sure, there's some paperwork, but this does cause confusion for people new to the program, and it's understandable. You must get yourself eligible for PSLF by ensuring that you have qualifying student loans with qualifying employment and on a qualifying income-driven repayment plan. You remain eligible by ensuring that you have these three things and by maintaining this eligibility for at least 120 months. Furthermore, these 120 months are not required to be consecutive. You can take a break from public service and enter the private sector if you wish. You can leave and later re-enter public service. If you do leave, however, do know that you do pause that 120-month clock. Your employment needs to be certified by your employer and approved by your student loan servicer like Mohila or FedLoan. Once approved, those months are added to your overall count towards that magic number of 120, and that count stays with you through to the end of your PSLF journey. The Department of Education announced the limited PSLF waiver on October 6, 2021, and it remains in effect until October 31st of this year. The limited waiver does what it says. For a limited time only, it waives some of the stricter PSLF program rules that have tripped up public servants historically and delayed their PSLF progress in order to fix past issues with the program. This cannot be emphasized enough today. The limited waiver ends October 31st, or in just 74 days. The program rules will then revert to those stricter PSLF rules on November 1st. Like the PSLF program, the limited waiver is not something you enroll in or sign up for. Yes, there's paperwork, but we'll discuss how the limited PSLF waiver affects the program criteria today. Qualifying employment depends on the following: who you work for such as a government agency or nonprofit, plus your designation or what your employment status is, plus how many hours you work per week. Qualifying employment is one of the three main requirements to be eligible for and benefit from PSLF. So what counts as qualifying employment? Well, if you work for a government such as federal, state, tribal, county, or municipality, or any public K-12 schools, community colleges, state colleges, and universities, then these types of employers are eligible for PSLF. 501c3 nonprofits are organizations exempt from taxes and carry the IRS designation of 501c3. This includes many charities and organizations that support social justice causes, human rights, animal welfare, foundations, and the like. It also includes many private colleges, universities, and independent schools. Note that a very small number of nonprofits not organized as 501c3s qualify. If you work for one of these types of nonprofits, then your employment is eligible for PSLF. Most importantly, it is not what your job is or what you do for your job. It's what type of organization you work for that makes you eligible. For example, a 501c3 nonprofit hospital is a qualified employer. If you're a nurse working there, then all your colleagues, such as your fellow doctors, administrators, janitors, and the like, also work for an eligible employer. To qualify for PSLF, you must be designated an employee and not a contractor. The easiest way to determine this is to answer this one simple question: do you get a W-2 tax form or a 1099 every January? If you answer a W-2, then you are an employee. If you get a 1099, you're a contractor and unfortunately don't qualify. You also need to work a certain number of hours to be eligible for PSLF. To qualify with full-time employment, you are designated full-time by your qualifying employer and work at least 30 hours or more per week. If you meet this requirement, you're eligible. For example, a friend works for a 501c3 nonprofit that has set 35 hours per week as full-time status. Since this has been defined by the employer and it exceeds 30 hours per week, your friend's employment counts for PSLF. Let them know, okay? To qualify with part-time employment, you need to work part-time for more than one qualifying employer and work at least 30 hours per week total at these qualifying employers at the same time. If your combination of jobs meets these requirements, you are eligible for PSLF. For example, an adjunct professor works at a public state university 19 hours per week and another 15 hours per week at a 501c3 nonprofit. The combined total is 34 hours, or more than 30 hours per week together, and both count as qualifying employment together. Please note, the limited waiver does not affect the qualifying employment rule, with one major exception, and right now only. You do not need to be employed by an eligible employer at the time of reaching 120 payments to get PSLF. So, if any of you have left public service and moved to the private sector and have made payments for at least 10 years, make sure you get your paperwork in as soon as possible after this webinar is over to get yourself eligible for PSLF. PSLF eligible loans include direct loans and direct consolidation loans, both subsidized and unsubsidized, Grad Plus loans and Direct Parent Plus loans. Only loans owned by the Department of Ed can be forgiven by the Department of Ed. That might sound repetitive, but this is fundamental to the PSLF program, and knowing this will help you on your PSLF journey. So what are ineligible loans for PSLF, and why are we even talking about these? These are FFEL loans, FFEL consolidation loans, both subsidized and unsubsidized. FFEL Parent Plus loans, federal Perkins loans, and other rare student loans. Well, thanks to the limited PSLF waiver, student loan borrowers now have this very limited time to convert any of these ineligible loans to PSLF eligible until October 31st via consolidation into direct loans. Borrowers will receive credit for past payments prior to consolidation. Those months will count toward that magic number of 120. Just a few brief notes about consolidation. Under normal PSLF rules, borrowers reset the payment clock after consolidation. It's only during this waiver period do borrowers get that credit. If you find yourself in this situation, you must act fast. Also, when you consolidate multiple loans that contain more than one each of subsidized and unsubsidized loan types, you will always have one subsidized loan and one unsubsidized loan at the end of the consolidation process. Note that the asterisks on FFEL Parent Plus loans. There's a very big exception to this loan type under the waiver, which Jen will go over a little later. Now I'll hand it over to her. Thanks, Jen.
Excellent. Thank you so much for that great start to our discussion, Christina. So Christina covered the first two PSLF requirements, full-time employment and having eligible loans. I'm going to now talk about the third requirement, making 120 monthly payments while employed at a qualifying employer after October 2007. So with the waiver, any period in repayment after October 2007 while working at a qualifying employer will count for the purposes of PSLF. This includes any periods of repayment, regardless of repayment plan, payments made on loans prior to consolidation, payments made on loans after consolidation, again, regardless of loan type. It also means that being in repayment status is what matters, not if you made late or missed a payment or even made no payment at all for that month. It also means that if you utilized 5 years of payments for teacher loan forgiveness, those periods in repayment now will also count for PSLF during the waiver period. So we're going to be talking a lot about the power of the waiver, and this is one of those most powerful actions of the waiver, allowing all of these past periods of repayment to count. So let's walk through a few scenarios just to highlight this some more. Remember that under the waiver, payments made to the FFEL loans are being treated as though they were paid to the federal government for the purposes of counting payments for the PSLF. So if you had a FFEL loan that you made 150 payments on and consolidate, your new direct consolidation loan will have 150 payments that qualify now for PSLF. If you have two direct loans that you're consolidating to benefit from the highest payment, let's say one had 30 months in repayment and one had 130 months in repayment, your new consolidation loan is going to have 130 payments that qualify for PSLF. The same is true if you had two FFEL loans, one with 30 months in repayment and one with 130 months in repayment. That new direct consolidation loan will have 130 payments that qualify for PSLF. So the next couple of examples are to show what happens if your loans are overlapping in their repayment histories versus when they're not. This is a frequently asked question in our group because the initial language was confusing. The key take-home point here is to know that your loans don't need to overlap to benefit from this waiver, but it will influence how many payments you should expect to have after consolidation. So if you have one loan that has 20 periods of repayment and you consolidate it with a loan that has 100 periods of repayment and the payments all overlap, that is, you paid the loan at the same time, your new consolidation loan will be credited with the total number of months in repayment. So in this example, it would be 100 payments that qualify for PSLF. Again, 1 month counts as 1 month regardless of how many loans you paid. If you have the same two loans, but your periods of repayment do not overlap, say you continue to pay on one while the other was in a non-payment status. So you have one loan with 100 months in repayment and another loan with a non-overlapping 20 months of repayment. Then your new direct consolidation loan would be credited for the total number of months in repayment. So in this example, you'd have 120 months that qualify for PSLF. And then the final example on this chart highlights a scenario where consolidation may not be your best bet. Let's say you have two direct loans that by themselves qualify for PSLF forgiveness. You should not consolidate them for reasons that we're going to talk about later when we touch on refunds. Again, just to highlight the power of the waiver here, like Christina said, under traditional rules of PSLF, which we're going to dive into later, consolidation restarts repayment counts in each of the above examples that includes consolidation. It would have resulted in the new consolidation loan to have 0 repayments after that consolidation. It is a huge boon that under the waiver, payments made are being counted after consolidation. So a bit earlier, Christina talked about converting Parent Plus loans. And she had an asterisk by it. So this is where we're going to talk through that asterisk because Parent Plus loans are a special case. Parent Plus loans by themselves do not benefit from the PSLF waiver. So if you have only a default Parent Plus loan, you must consolidate them into a direct consolidation loan, and no prior payments that you made will count, and you'll have to restart that 120 payments on the new consolidation loan to qualify for PSLF. If you already have direct Parent Plus loans, that means that you've already consolidated them, and any payments since consolidation will count. Now, special case here. If you have Parent Plus loans and your own student loans, whether they be default or direct, you can consolidate them all together, and the new consolidation loan will take on the payment count of your own student loans. So the Parent Plus loans essentially ride on your own student loan back to forgiveness. As an example, let's say you have your own student loan payments and you've made 115 months in a repayment while you've worked for a qualifying employer, and you consolidate your Parent Plus loans that you took out for your child, then your new direct consolidation loan is going to be credited with those 115 qualifying months for PSLF during the waiver period. Again, this is dependent on your qualifying employment and not your child's. And finally, there is a special note here about ICR repayment and how to remove that through double consolidation. That is going beyond today's scope of conversation, but I did want to include those on the slide so that you know what to search for after this conversation. Okay, so after that quick segue over to PPLs, I want to turn our attention to refunds for payments beyond the 120 payment obligation, as this is another common question that we receive. Any direct loan payment in excess of 120 payments on that loan is eligible for a refund. But note that since consolidation creates a new loan, if you consolidated, the payments must have been made after the consolidation to be refunded. Also, this is for payments on direct loans only. Remember that FIFO loans are bank-owned loans that are federally insured. So when you make a payment, you are paying the bank and not the government. Since your payments did not go to the government cannot and will not refund you. So let's walk through some examples that demonstrate these refund scenarios. If you had a FIFO loan that had 150 payments on it, you consolidate it to a direct consolidation loan to take advantage of the PSLF waiver and make no new payments on the direct consolidation loan because you don't need to, you're over 120. There is no refund because there are no excess payments on the direct consolidation loan. Similarly, if you have two direct loans, one had 30 payments and one had 130 payments, again, you consolidate them to take advantage of the highest payment count under the waiver. Your consolidation loan is credited with those 130 payments, but again, you haven't made a payment on your new direct consolidation loan. There is no refund because there are no excess payments on the direct consolidation loan. The same thing happens in the next scenario with FIFO loans. Again, no new payments on the direct consolidation loan means there is no refund, as there are no excess payments on the direct consolidation loan. Only the bottom two scenarios may result in a refund. So in the scenario with two direct loans, one with 120 payments and one with 150 payments, both are eligible for forgiveness on their own. And we would recommend that you not consolidate them to preserve any potential refund. And then in the last example, let's say you paid 20 months on a FIFO loan, consolidated it in, say, 2010, and continued to make payments until COVID forbearance started in March of 2020. You would have over 120 payments if you applied for PSLF today. How do they calculate your refund? So they determine your 120th payment month, and any payment made after that time is refunded. I also like to remind everybody that the COVID months with $0 payment, and if you get a refund of those $0 payments, a refund of $0 is $0. That is also a common question we get asked. So, as we've highlighted today, this conversation, the PSLF waiver is powerful in how it allows you to consolidate loans and count months in repayment. And we really don't want you to miss the opportunity because this ends on October 31st of this year. So what do you need to do to take advantage of this magical waiver? Number one, get very familiar with your loans. The more understanding you have of your own loans, the more power you go into this process. Number two, submit a PSLF application. And number three, prepare for the end of the waiver, just so you know what's coming when we return to the traditional PSLF rules, again, after October 31st of this year. So let me walk us through step one, getting very familiar with your loans. To do this, log into studentaid.gov, learn what type of loan you have, and determine what action to take first. If you have a single direct consolidation loan, which again is going to show as two arms, one subsidized and one unsubsidized, based on how interest is accrued, celebrate. You are all set for the next step. If you have multiple direct loans under 120 payments that you want to consolidate to benefit from the highest payment count, or just to keep track of them easier, consolidate them. If you only have FIFO loans, you must consolidate them to take advantage of this waiver and PSLF. If you have a mix of direct loans and FIFO loans all under 120 payments, consolidate them all together. Now, if you have a mix of direct loans, say you have a direct loan that's over 120 and some FIFO loans that are also over 120, we would recommend that you consolidate the FIFO loans into a direct consolidation loan and leave the direct loans alone, again, to protect any refund that you might be due. Now, in this last scenario, you're going to have to do some math. If you have a mix of direct loans that are over 120 payments and qualify for PSLF on their own, and you have FIFO loans that are under 120 payments, you need to do the math to decide if it's better to leave the direct loan by itself to preserve your refund or consolidate them all together to get immediate forgiveness. We just simply can't answer that quickly for you, and you're going to have to literally do the math. Okay, step two is preparing for the end of the waiver is submitting a PSLF application. The PSLF help tool can be found at studentaid.gov. The great thing with the help tool is that it creates a code on the form. So when you submit it, it submits for faster processing. I have here theoretically because everything is taking a long time right now. So I wouldn't necessarily expect fast at the moment, but that code does help them know that this is already an approved employer. I always want to make a note as well that you need to submit a separate PSLF application for every period of qualifying employment from every qualifying employer to get credit for every qualifying payment. They don't know who you worked for unless you tell them. I know this can be a hassle. I had to do it myself going back to 2008 to get employers to sign, but it's a hassle. It's a very worthy hassle to take on. The next bullet here is signing with wet ink. Yes, there are acceptable electronic signatures. But it is not the secured Adobe electronic signature. It is not a CAP card signature. Frankly, I feel like it's just easier to get it signed with wet ink. Again, I had to go back to jobs in different states in 2008. I emailed the forms to them, they printed, signed it, scanned it, and emailed it back to me. Was it a hassle? Yes, but it was worth it. Finally, you're going to submit your form to Mozilla. The fax number and mailing address are on the form. If you already have an account with Mozilla, you can upload directly to their website. If you submitted to FedLoan already and now have a Mozilla, you should not have to resubmit your paperwork. If you don't have either Mozilla or FedLoan and you've never submitted, submit to Mozilla. If you have already submitted to FedLoan, hang tight. They will get to you. It will happen. My final note on here is to triple check your work. One of the very worst feelings is submitting your PSLF application, waiting 120 days for it to be processed, and then learning that you had it signed electronically and it's not accepted. I know this from experience. Please do not let this happen to you. And with that, I'm going to hand off the conversation to Matt, and he's going to start off with what to expect after you've submitted your PSLF application during the waiver period.
Hi, thanks, Christina and Jen. Thank you for excellent summaries so far. I'm going to walk through what to expect after you certify your employment, after you certify your PSLF application form with your employer's signature. And again, as Jen mentioned, as it says clearly on the form itself, you do need to submit this form to Mozilla. And to take advantage of the generous terms offered under the limited PSLF waiver, you need to submit this employment certification by October 31st, 2022. That's a date that you're going to hear many, many times from me. So if this is your very first time submitting employment certification, you will need to fax or snail mail your application. And as they say, why not both? The fax number and mailing address are written very clearly on the form. When you do submit, make absolutely sure that you keep originals for your own files. And again, if you do already have an online account with Mozilla, you will be able to upload your documents directly, which will be faster than faxing or mailing. So again, after you submit your form, you will need to wait. Processing times for employment certification with FedLoan recently were running about 90 to 120 days. There is no evidence yet that the change in servicers from FedLoan to Mozilla is making much of a difference. So what is it that happens during that massive processing delay? Your certification is not just sitting in a queue waiting for someone to do anything about it. What Mozilla is going to do is locate all of your different loans from all of your different servicers, and they're going to become your servicer. That's the company that sends you your bills and administers payment on your loans. And so, as Jen mentioned, you have probably used the PSLF help tool to generate a PSLF form, which includes no errors. And you probably know already from the PSLF help tool that your employer already qualifies. Mozilla will double check against your payment history, and then they will return a count of the qualifying payments you've made, and they will display that to you on the Mozilla website through the PSLF payment tracker. So be aware that for this initial count, Mozilla can only report the data that they see, and they can only see payment data on payments that have been made since your most recent consolidation. The Department of Education will review all of your payments which have not qualified in the past and add those afterwards. That's primarily payments which were made prior to a loan consolidation. That's a recent one or a past one. Payments which were made under a non-qualifying repayment plan, more on those later. Payments which were made late or for less than the full amount billed. All of those payments will be added to your count, but they may not be added initially, and they might not all be added at the same time. So let's note here that any previously non-qualifying payments which do qualify under the waiver and are added to your counts will not disappear after the waiver period ends. They will not turn back into a sad, rotting pumpkin after Halloween. They are yours to keep until you earn forgiveness. Advanced slide. Advanced slide. Okay, so here are some of the benefits of the waiver which will actually end at the end of the waiver period. And again, that's going to be on 10/31 of 2022. These should help you understand the value of acting now and also prepare you for what's to come after the end of the waiver. So loan consolidation rules are currently waived. So loan consolidation will once again restart your payment count at 0 after 10/31/22. Many payment qualification rules are also currently waived. So to qualify after 10/31/2022, all payments must once again be made on time and in full. Also, payments made after 10/31/2022 must once again be made under a PSLF qualifying repayment plan. Again, more on that later. So employment rules for people who are still employed have not changed under the waiver. Also full-time employment for a qualifying employer or nonprofit public service employer has always been and always will be required for payments to qualify. So let's reiterate and let's go deeper into the changes to loan consolidation and payment qualification rules under the limited waiver. During the waiver, payments qualify if they were made on previously ineligible FFEL or Perkins loans, so long as consolidation is requested before 10/31/2022. After the waiver period ends, qualifying payments will only be able to be made on direct loans. During the waiver periods of repayment. So during the waiver period, repayment under any payment plan qualifies. After the waiver period ends, repayments will once again only qualify if they are made under a qualifying repayment plan. Also, during the waiver, any period of time in any payment at any time during any month qualifies. After the waiver period ends, only payments that are made on time and in full will qualify. And also for retirees and other people who've left employment, as Christina mentioned earlier, during the waiver, you can apply for and receive forgiveness after you have left qualifying employment. And after the waiver period ends, borrowers must remain employed full-time in public service when they apply for and when they receive forgiveness, or they must return to qualifying employment full-time in order to apply and in order to receive forgiveness. And finally, for teachers who have received grants under the Teacher Loan Forgiveness Program, during the waiver, months of payment which qualified the borrower for their TLF grant, or at least most of them, can count as PSLF qualifying payments. After the waiver period ends, those months will no longer qualify. So we've talked a bunch about the importance of qualifying repayment plans. Let's review those qualifying repayment plans now. The 10-year standard repayment plan, that's the default repayment plan for new direct loans. That qualifies for public service loan forgiveness. Under that plan, the borrower will make 120 equal payments, and those payments in sum will pay off all of the principal borrowed and all of the interest charged. So income-driven repayment plans also qualify. Income-driven repayment calculates the monthly payment based solely on income and family size, not on loan principal or interest. Now, there are 4 separate IDR plans, each of which has its own eligibility requirements and a specific way of calculating your monthly payment. They are IBR, income-based repayment, ICR, income contingent repayment, pay as you earn, repay, revised, pay as you earn. We don't have time to talk about the details of any of these plans right now, but just another reminder that payments that you make, qualifying payments that you make, do not need to be consecutive. Okay, so we have talked about the requirement that payments qualify for PSLF based on the repayment plan. let's talk about the only exception to that rule, which is a program called Temporary Expanded Public Service Loan Forgiveness. So TEPSLF is completely separate from what some people call the temporary waiver and what we've been discussing as the limited PSLF waiver thus far. So in 2018, Congress recognized that a huge set of borrowers had been misled, actively misled, and told that their payments would qualify for public service loan forgiveness. So to address that issue, they relaxed the payment qualification rules for those borrowers and also for everyone else at the same time. So this fix was called temporary because the money that they appropriated to fund this additional forgiveness for this group was designed to run out. And it's called expanded because it offered qualification for payments made under additional repayment plans other than the PSLF qualifying repayment plans. So this benefited borrowers who had met all of the criteria for their payments to qualify under public service loan forgiveness. That is, they were employed full-time in public service employment. They had direct loans. They made their payments on time and in full, but those payments did not qualify for public service loan forgiveness because they were made under the less expensive extended or standard repayment plan for consolidated loans, under graduated repayment, under extended graduated repayments. So you may have seen these repayment plan names as options if you have recently filled in a loan consolidation request. So people who met all of those criteria under TEPSLF would see their payments qualify and would see their those qualifying payments go up to 120, and when they went up to 120, they would be forgiven out of that appropriated money. So why is this still relevant, and why are we talking about it? Why am I going on for so long about it? I'm going on for so long about it because this money still exists in this fund, and rules still exist to qualify payments and to forgive entire loan balances based on this program. So the important thing is that borrowers who have only a small number of payments left to make until before they reach 120 and will be hard pressed to afford payments under an IDR, which is going to be more expensive than their extended standard graduated or extended graduated plan. They can still make lower payments under those less expensive plans. Those payments will still qualify under the TEPSLF rules, and those borrowers can still receive forgiveness out of the temporary appropriation. But if you decide to do this, you must pay very close attention to your payment counts and very close attention to the rules for the final payments. So, temporary expanded public service loan forgiveness. And so we also, there's next month, there's going to be a presentation on the IDR adjustment, which also is going to add additional payments to your account, or may. So we're going to just skip this slide. And so we know that our presentation has been super clear, super concise, super cogent, but we can't answer every single question. We can't solve every single problem. So these people might be able to help. Federal Student Aid Feedback Center, Federal Student Aid Ombudsman, Consumer Financial Protection Bureau, our lovely hosts today. Also, the DMs of Dr. Cardona, the Secretary of Education, on Twitter or on Facebook, as well as direct appeal to members of Congress or senators, your elected representatives who work for you, after all. But please, please, please exhaust all opportunities for your servicer to help before you contact these folks. And just in case none of your questions get answered, you might find that our mods and admins and our 140,000 member community might well be able to answer some questions for you as well. So please do join us in our truly, truly, truly excellent group. And thank you all for your attendance. And I'm going to pass over to Ukola.
Wonderful. Thank you, Matt, Jen, Christina. That was such a valuable presentation. You guys gave a ton of information. The chat has been very engaged. Just thank you so much for all of the wonderful information. I will go through a few quick additional resource slides, and then we'll get into Q&A because we got a ton of questions and we only have a limited amount of time left. So the Department of Education has quite a number of resources on their website dealing with PSLF. You can go to their website, which is listed on this page, to get to look through their FAQs, their frequently asked questions pertaining to PSLF and the limited waiver. You can also access the help tool, which is where you would submit your PSLF application. And also you can find information on how to consolidate your loans, all on the Department of Education website. Also, if you need additional help beyond what the Department of Education provides, you can contact your servicer. We definitely recommend that everyone would contact their servicer to get more information that is more geared to your specific situation. If you run into any issues contacting your servicer, reach out to the FSA Ombudsman Group, and also feel free to submit a complaint through CFPB's complaint portal. An additional resource that I want to just plug in here is our podcast, Financial Intuition. We have tons of information that you can listen to in a podcast format available for you on our website. You can access the podcast on our website or streaming platforms where you listen to your other podcasts. And if you joined this webinar today and you've already submitted your PSLF application, we would love to hear from you. We are hosting consumer experience interviews with any consumers that are interested in sharing their experience with us on what it was like to apply for the PSLF program. So if you've submitted your application already and you want to share your experience with us, please send an email to the students at CFPB website, inbox, before August 25th. We have a limited number of slots open, but we would love to hear your feedback in terms of what the process was like for you with submitting your application through the PSLF program. Again, if you are interested, just send us an email out to our students at cfpb.gov email before August 25th. I'll leave this slide up and we'll go ahead and get right into questions. And I see a few of the most recent questions that were posted in the chat in regards to whether this webinar will be made available. The answer is yes. The webinar will be made available within about 2 weeks. It will be posted on our website. I'll drop the link in the chat again so you can have it. I advise you to bookmark it. The webinar along with the presentation, so you'll have access to all of the slides and all of the links that are in the slide. So we'll go ahead and get right into some of the questions that you all asked. The first one is, I have a FFEL loan that I have been paying for 8 years. Can I consolidate to get 8 years of qualifying payments credited toward PSLF under this limited waiver?
Jen, would you like to answer that?
Absolutely. So the answer here is yes. If you have a vehicle loan that has 8 years of repayment, absolutely consolidate that to a direct consolidation loan. If you do that prior to October 31st, 2022, submit the consolidation and also submit your PSLF application. Both of those need to be submitted prior to October 31st, 2022, so that you are able to be processed under the PSLF waiver. That is how you will get those 8 years of payments to qualify.
Okay, great. Thank you for that. The next question, should someone wait to apply for PSLF until consolidation is completed, or should they submit for PSLF while they're waiting for their loan consolidation to be processed?
Matt, would you like to answer that?
Yeah, I would love to answer that question. So this is something that people ask us an awful lot. And what we have recommended in the past is that people wait until after their consolidations are complete before they apply, before they put in an application to certify their months of employment. We've recommended this because some people, when they submit their employment certification, that will push some of their loans over 120 payments, and those loans will be automatically forgiven before those loans can be consolidated with their other loans that had fewer than 120 payments. Um, so that's, so if there's any chance that any of your loans are going to be forgiven, you want to be very, very, very clear that you consolidate and you get confirmation of your consolidation before you certify any employment. But that said, many, many people who have not been in that situation have certified their employment before their consolidation has gone through, and they have not suffered any dire consequences. So I hope that answers the question. Yes, you should consolidate before you submit your employment certification.
All right, great. And then we had quite a few people ask about the Parent Plus. Would one of you mind just giving a really quick um, overview of the Parent Plus exception, how someone with Parent Plus loans can become eligible for the limited waiver?
Yeah, I can answer that. Thanks, Bacola. So Parent Plus loans um, are student loans that parents take out for their children to pursue higher education. If you consolidate Parent Plus loans on their own into direct loans, it resets the payment count, and you're back to zero no matter what, even under the waiver. The exception is right now under the waiver, if you have Parent Plus loans and you're a parent and you have your own personal student loans from your studies, whether master's or undergrad programs, if you combine and consolidate your own student loans with your newer Parent Plus loans from your child's education, and you are in public service and you meet all those requirements of public service for the program, you can get those, you can benefit from the higher payment count on consolidating all of those loans. Okay, so let me just repeat this another way. If you're, one more time, if you're a parent and you have Parent Plus loans and your own personal student loans that are FFEL or direct loans, and you consolidate them all together under the waiver, the higher payment count will apply to all of those loans under the new consolidation loan. And you have to be in public service to benefit. I hope that clarifies that, Bukola.
Yeah, that was great. Thank you, Christina. We also got a few questions about loan servicers. So if someone received the notification that their student loan servicer will be changing, who should they follow up with if they have questions about PSLF, or should they wait until after their loan is transferred to a new servicer before moving forward with submitting any paperwork or reaching out?
Jen, could you take that?
Yeah, I can take this one. So who your loan servicer isn't going to dictate who you submit the PSLF application to. You're going to submit that to MOHELA no matter what. A lot of people right now are in transition. There are a lot of people that have submitted PSLF paperwork, and that's what triggers the transfer of your loans from your current servicer to the PSLF servicer, which is now MOHELA. And a lot of people are finding that their loans are currently in that transition period. I like to call them in the cloud. Sometimes that can take 3 to 4 weeks between servicers. And I would just recommend everybody just hang tight. I know it's frustrating. I've been through this myself, but they will show up and all of your information will come with. It can take a while. We've heard that some people are getting their loans on MOHELA. First, they're able to see their loans, and then within a couple of weeks, the information comes online from their PSLF application. I would just urge patience. It will come, it will get to the right spot. And the PSLF application being processed is what triggers the transfer of your loans from a different processor to MOHELA. One other quick comment is I saw somebody in the chat asking about their loans being consolidated and going to Aid, I want to say Aid Advantage or Aid Vantage. And that is the current process for consolidation to MOHELA. Is first they kind of have a way stop over at Aid Vantage and then they get to MOHELA. So if that happens, please don't freak out. It's there. Thank you.
Great. And then, so the next question is, if my account has not been reviewed by October 31st, is that person still eligible? I guess what they're asking is, does the PSLF approval have to come before by October 31st, or should people just focus on getting their documents in by the 31st and approval can come sometime after?
Yeah, I can answer that question. That's a really common question that people have. The deadline of October 31st is for receipt of documents. So if you need to consolidate before October 31st, in order to make, your consolidation date that it's submitted before October 31st will suffice. If you need to certify employment before 10/31, an application which is received before 10/31 will suffice. So processing delays after October 31st are built into the process. There's not any need for you to have applied 90 to 120 days in the past. Does that make sense?
Yes, that makes sense. We'll take a few more questions. I consolidated today. Should I wait to get confirmation that they are consolidated before I submit my PSLF application?
Yeah, I'll take that. Thanks, Bukola. Yes, if you just consolidated today, please give it, let's see, what are we? We're August 18th. I would give it 3 weeks minimum, which would take us a little bit into September before submitting your PSLF application. You should have movement on there within possibly 30 days. Where these are estimates, like where we don't work for MOHELA or federal student aid or the DOE. So it's, you just give it, we have 74 days. Give it 20 to 30 days for that ball to start rolling, to see movement from your loan servicer or servicers, if you've got multiple servicers, for those loans to start making a movement towards MOHELA. Then while you're waiting for that consolidation to move over, right, to MOHELA via Aidvantage, remember, this goes through Aidvantage to MOHELA. Once you start seeing it movement towards Aidvantage, you're going to be getting together all your PSLF applications for all your qualifying employment, all since 2007, if your student loans originate as far back as 2007, or your repayments originate as far back as 2007. And then what you do is you get those all together while you're waiting for the consolidation to take place. When you see that movement from your current servicers to Aidvantage in the next 30 days or so, you go ahead and then you can submit all those PSLF applications at the same time. You'll be sitting in a really good spot right there. I hope that answers the question.
Wonderful. Yes, thank you. We are at time for today's webinar. I know there's a ton of questions that are still coming through in the chat. Your questions today will help inform future webinars that we put on in the future. So please, if you're not signed up to our mailing list, please join our mailing list so that you can be informed when we have future webinars. Again, I want to thank our speakers today, Christina Ceballos, Matt Amory, and Jen Olucha. Thank you so much for all of the information you shared today, and that concludes our webinar for today. Thank you.
Thanks so much.
Thank you.
Thank you very much, everybody.